Look closer in here. What do you see? Let's zoom in. So here is that area here. And inside this own area of shadedness, I'm taking your attention to this short-term low here. So we have a short-term low here, and then it gets taken out, and then we have this low here, and it starts to rally up. Look close. Do you see that this is a swing low? Again, these are daily candles. They're not lower intraday charts. We have a low that takes out sell side here. Runs down, creates that low. One more smaller attempt to go lower than this day. It does. Then the following day, we open, trade down, and trade back up. This is a swing low on a daily chart. After we've taken out sell side below here, and we have a short-term sell side liquidity pool here, which it runs down into, and then creates a swing low. So we're in a discount inside of a discount. Think about that now. If sell side's been taken here, and sell side's been taken here, what's it going to revert back to? Buy side. Where's that? Swing high on the daily is here. So if it's going to go here and run to that level, buy side is simply not just that at that level. What's above that? Bingo. Our gap. Notice how we had sell side taken here, and then the market reverts back to buy side and to an imbalance. That gap. Large range day. Well, how did we know, or how could we have known, that Friday was going to be a large range day with an up movement? Well, let's dig into that now. All right, so we finally made our way down into the hourly chart for S&P. Here's our gap from the daily chart that's noted here. And here's that old sell side liquidity pool. And we dug down into that. And I'm going to add some day dividers here so that we can get a little bit of context. I want you to look at the profile of the week. What I'm about to show you, this is it. This is what makes the market do what it does. Okay, this is how price books. Weekly profiles are a template. Okay, how should price deliver? I'm going to walk you through this one here and how I was able to tell you before the fact on Friday that we would see 3880. So on Monday, we opened from all of this nastiness here on the previous week. The market starts right away on Monday, just starting to go higher, repricing, going higher. No one can go short, no one can go long because it's just constantly just going higher. If you fight that, you're dead. You got to wait for some kind of displacement. When does that occur? On Tuesday, we have a little bit of a movement here and then breaks down. Then sell side is taken, and think about what I showed you on that daily chart. We now have a swing low. So on Thursday, we can anticipate the market doing what? Coming back down to a discount, rallying up, and right about here, that's why I said weekly objective on Twitter is 3880. Now, why did I pick that? I'll tell you in a moment. But Friday, notice what we have here. The market's already moved above all the consolidation here. It's not likely to do what? Have a sharp movement lower. It's not going to take sell side out because it's already done so here in the consolidation. It's already worked into this fair value gap here twice with a sell stop run there, taken out here, digging deeper into this imbalance, leaving the bottom portion of that imbalance open, making it what? A breakaway gap. So it's indicating that it's not likely to have retracements of any magnitude that would see this revisited again. So we had this level taken out here, retraces back down into a short-term discount from low to high, fair value gap, digs into this here, and then once more on Thursday, it rallies, comes back down in, retraces, and this is where I'll talk about what I was wrong about on Thursday, but right about the second part of the day. But Friday, we just started consolidating, had a little bit of a movement on a lower time frame in London, which I'll show you, and then off to the races because the market only had Friday to fulfill a run into that gap. Everybody knew about this gap. Nobody knew when it was going to hit it until around Thursday. We're going to drop down into a 15-minute time frame. You can see the fair value gap here. We dropped down into it in London, consolidated into another run into that fair value gap in London, and then aggressive run right at the 9 o'clock hour. Market was not going to give anybody an opportunity to see a deeper retracement. And inside this run, I'll show you what it looked like also, but this is the low-hanging fruit objective. Right away into the 1-minute chart. You can see at the New York session at 9:30 equities opening, We see a run aggressively here, fair value gap. It drops down into it. Buying opportunity if you were trading with the New York 930 opening and the target, that gap, the shaded area up here. You could be a buyer here. The market rallies up, creates another fair value gap there. Again, thinking about that weekly profile, don't expect it to retrace. Don't expect it to have any kind of movement lower. It's in a hurry, folks. It's been stagnant most of the week, waiting for price to show a willingness to want to go higher. Once it showed that, it wasn't coming back to old resistance, broken turn support. Think about what I showed on the hourly chart. Rewind the video back to the hourly. You can see how the market did not, once it broke above, it did not come back down to what logical support level would be seen with retail, seeing old highs broken. Let's wait for it to come back and touch it again. That doesn't work, folks. It's not when you have time crunched like it is here. Friday was the day of delivery. Now, you have obviously a setup here, and you have a setup here. No retracements, no funny money, just straight to the draw of that daily gap. So what's the benefit of knowing what the weekly profile is going to be? Knowing where the draw on liquidity is, where's it likely to go? So granted, Friday was is a blistering run higher. Most of you probably didn't participate in it, but I did talk about this very approach to engaging a fair value gap when the market does not do a drop down when it's bullish for a Judas swing and take out sell stops, because sometimes it's going to create these opportunities. How could you know it was going to do this? I taught you that in this lecture because of the weekly profile, that gap that was looming above on the daily chart, which is shaded here. The fact that we only had Friday to get to it. And the market was just basically saying, we're not going lower. We're not going to go any lower. And it kept taking out buy side, but not drawing down and completely breaking lower. It would go for a short-term area of sell side, but then immediately rebound and go higher to take out buy side again. So what that was indicating to me as the analyst, they're gravitating towards this gap. So you wait each day. Now, I thought that we could have started to run up to it Thursday a little bit better than we did. Like, I was expecting a whole lot more energy on Thursday. But because we didn't get that, that's why Friday was it. That was the big hurrah. That was the floodgates opening up, and you better be on board or get the hell out of the way.